Hello, it's me Adnan Rahman. I hope you guys are doing well. I'm the market analyst for Errante. And in this video, I'll cover two things. The first one is the history for the USD, what has been happening in the recent days. And then I'll take you to the analysis of the upcoming FOMC news. Okay. The first thing that we have is that it's proposed that there will be a 25% tariff on Canada and Mexico as early as the 1st of February. And now there are news that maybe it can proceed just like Colombo, it can proceed on this upcoming Saturday. Okay, but nothing is answered. It's only a rumor right now. It's not clear. Okay, and then the higher duties are suggested on European Union, Euro, and the China as well. Okay, so keep this in mind. This suggestion may weigh on Europe and Chinese currency as well, but you can understand that UK is totally out of this thing. That means it's not that under pressure. It's not under the waters right now, and that is one of the reasons why UK has been going towards the upside. By UK I mean GBP. Okay, so keep this in mind. And then we have this infrastructure plan. Okay, and it's a 500 billion AI infrastructure plan, and it's one of a kind of in history, the biggest one. And the companies participating is in this one is the OpenAI, AI, SoftBank, and Oracle. The reason why I've mentioned these countries is that you can look into the stocks of this country and indexes, and then you can like go into this AI index. Okay, keep this in mind. And then when it comes to economic indicators, the initial jobless claims were like 223k, and the expected was 221k, so it's not too much. It's okay, fine. Okay, fine. And then the reason why I've written this is that most of the people will consider this, that okay man, the jobs market is going down, doomed. It's not that scenario. The overall analysis or the consensus is this, that the strong labor market narrative remains intact. Okay, please keep this in mind. So now you don't need to think that the job market is going weaker or it has gone weaker. And then after that, in regards to the Federal Reserve and monetary policy, Trump, he has made his suggestions and proposals to have rate cuts towards the downside, and pressure for rate cuts in other way, in other words. Okay, a dovish sentiment. So what do we know? USD, okay, was towards the downside, and to the contrary, GBP, that was like not facing the heat of these tariffs, have moved towards the upside. Okay, so keep this in mind. And now today we have this FOMC stuff. Now let me take you towards that, and before that I would like to explain you something regarding what are the sentiments in the market right now. Okay, okay, in terms to like going for analysis of FOMC, what do we know? Okay, FOMC means interest rate decisions and all that stuff. What do we know? What are the rate expectations right now? There are 99% chances of a hold. Okay, 99% chances of a hold. This is something that has been priced in by the traders. Okay, traders like guys like you and guys like me. And now when we have to study the interest rate, always we need to look for what's happening in the CPI, and the core CPI is like 3.2%, and this is kind of a sticky. Let me change the color so you can see very well. This is kind of a sticky one. The inflation is sticky. Obviously they have to keep the interest rates at the higher levels, or at least in a hold scenario, to stop it from going higher further. Okay, and then when it comes to GDP, the growth cycle, I've already explained you that while looking into the interest rate, you guys need to understand that is the economy into a stagflationary mode or not. Okay, so for stagflation we need to have a view of two things. One is CPI and the other one is GDP. I have a detailed webinar on this one. I'll make a new webinar. Okay, you can have a detailed analysis on this as well. So in other hands, what do we know? That the GDP is 3.1%. It's pretty solid as compared to the other countries, and the other countries GDP is like even below 1%. Okay, so this is pretty solid growth. So what do we have? GDP is okay, good one, and the CPI is also to the upside, or at least on the hold side, so suggesting a hold scenario. Okay, and when GDP is also up, then a hold scenario falls over here as well. That's the reason why we have this 99% chances of a hold. And then when it comes to inflation expectations, this means what is expected in the number of coming years. Like, see, we have this 5 years expectations and we have this 10 years expectations. In 5 years, the inflation is expected to be like 2.5%, and in 10 years it's expected to be like 2.4%. So it's still below the 3%, but above the 2%, somewhere in middle. Okay, so now if they will lower the rates, then these values will go cross 3%, and that's what they don't want. Okay, so in all the scenarios, it's not a possible, or I won't use the word possible, sorry, it's not a feasible scenario to go into a rate hike type of stuff. Okay, so this is the main picture of this one. And now let me tell you about the outcome scenarios of what can happen. Okay, this might be a video that above 10 minutes threshold, but this is something really need to know. What I've done is I've marked three scenarios or outcomes, you can say. The first one is dovish one, the second one is hold one, and the third one is hawkish one. So let me explain you this in an easy word. Like, see, for example, I've told you that the CPI is high, and the GDP is also high, and inflation expectations are also high. So it's not feasible to go into a cut scenario. So what happens is, the case that we can be seeing into a hawkish one is, like, see, if we have a 25% of cuts, okay, a 25 basis point of a cut, and then they say that no cuts are needed, okay, there will be no cuts or very less cuts, okay, and only two cuts for 2025, that means that the dollar can go towards the upside, okay, while keeping this growth and inflation in mind as well above these levels. On the other hand, if they are saying, okay, we are going for a cut, okay, we are going for a cut, 25 basis cut, but we will pause the cuts now as well. Okay, so that is a whole type of a scenario. Okay, and you can say it a middle one or a whole type of a scenario, a middle scenario. And then if we have an option like there are 25 basis point of a cuts, okay, and they are saying that we will be further easing ahead. Okay, easing ahead means more cuts. In that case of a scenario, that you can expect the dollar to go towards the downside. And then obviously in the dot plots, you need to keep this one thing in mind. This is very important, man. I mean, this dot plot is more important than the rate cut or rate decision itself. Okay, because what it displays us, it gives us the opinions of all the members. Okay, all the members, what they are thinking, what are they plotting in terms of GDP, inflation, and jobs. Okay, and these things are the main three things that we need to get analyze the market. Okay, so dot plot is very important. If in dot plots they say us, let me get rid of this markings. In the dot plots, if they say us that, okay, we'll be having 4 cuts in 2025, and the interest rate will be like 3.4%, that will be dovish. Okay, but they said, okay, no man, we will only be having 3 cuts. Okay, and the interest rate will, after all of these cuts, it will go to like 3.6%. So that will be a middle scenario, not too good, not too bad. But then if I say only two cuts, and then the interest rate or the median interest rate, what is the median interest rate? It means all the, the average interest rate projected by all the members. Okay, so if they are increasing it to 3.8, that means, okay, we are having less cuts. Okay, and the interest rate is up, that means it is a kind of a hawkish news. So keep this in mind. Okay, in terms of jobs, cooling job market remains strong, and job market remains strong, then further job creation. Focus on these words what I have written over here. Okay, this is very important. And then this is the reaction. I hope you can understand. The video is above the threshold. Okay, so anyways, it was a longer one, but trust me, these things were important to be discussed. Just after this, I'll have a video regarding the other fundamentals of all the other major economies. Those videos will be smaller one, like of 3 or 4 minutes. So thank you for your time. Have a good day.